Uh, I think we are from an era which is almost 25 years back when I joined tech in, I'm talking about 2000, or rather, sorry, not 2000, 1997, looks like antique. And we would try to do anything on technology or digital. So I'm an MBA, I'm not a tech guy. I'm an engineer and I have done MBA. And there's a lot of insult to be in tech, okay? A lot of people would make a bit of a comment on us that, "Ye kya kar raha hai yaar? Career kyun kharab kar raha hai?" And we could see it, we all could see it, right? And from that time to this time, I think we have realized a lot of change. I remember even my days on the banking side, even when I was very senior, board was not involved into activities, right? Board would not bother about it. Today I see an environment where CEOs talk about AI, CIOs don't talk about AI. They actually are involved in getting the AI projects done, right? I think what we saw on Sudipto's side, or what we see today in each of the banks and NBFCs, right? So I think what I wanted to bring to the table was technology projects are no longer looking like a tech project now. It is the business reason. Imagine Aadhaar was built on human documents. It will be a joke, right? Imagine UPI required approval of 3 people. I remember once when UPI went live, somebody wanted to manually approve because NEFT used to do batch approval. They wanted to approve and say, if I can't approve, I'll not use it, right? So we are coming from that era to an era where tech is important, but it's still not very important. It's still not very important. A lot of times, I'll be very candid here, illiterates decide a lot of times. Tech illiterates decide a lot of strategy. Tech illiterates means you don't know about technology, but you would have, let's say for example, in this event, somebody sees something and brings to the table of CIO, it's disaster. Talk about it, how in my architecture it's going to work. Otherwise, you will run up and quickly say that, oh, we are not agile enough. Agile means what? How do you embed? How do you run? So I think that's a thought process we want to bring to the table where technology programs are led proper. So it's like this, in Dhurandhar, I'm sure most of you would have seen Dhurandhar, right? So Dhurandhar is loud. But the hero in the movie is very sort of okay guy, right? He's not showing off. That's where the tech is, right? It is doing the work in the trenches, but it's not very visible. It is what the market is. If P&L will be changed, which will happen because of people out here. So thank you for the forum here, joining us here. I think I always have this, I reach out to them and they say yes. So thank you to each one of you to just coming across on just one WhatsApp message itself, right? So Ramesh, I think given your role and whatever you've done in the market across board, right? You have led group roles as well. What does it take to build standardized technology frameworks? And how do you sort of operating models, how do you build, how policy and regulations help in choices? So I want to know a bit of broad level thought process from you initially before we come down to the brass tacks, right?
Thanks, Amir. No, I think, the reality is every business is a technology business, right? But not every company is a technology company. I think that's the distinction we need to really understand it. I think today you get a lot of support from the management, the board, if you're going to spend on technology, if you're going to make process better. I think we have crossed the age of where a lot of people were simply saying something in the board and management. At least I have not seen in my last 15 years. People have extremely matured in the last 5, I would say very matured. I think the key thing when you do larger group roles is, I think first thing you need to really have standardization in mind and not centralization. So centralization is very difficult to achieve, and centralization can be achieved if you are doing the same thing in 55 countries, right? It works very well for the MNCs. It does not work for someone like us because we are in one country doing 10 things, right? So standardization plays a very important role than centralization. I think a lot of people get that wrong, right? I think that is number one, which is extremely key. A second thing is you should also be very clear what you're not going to do. So for example, in our life insurance business, we run a fairly dated technology. Am I going to go and completely change it? No, the business is happy. It brings in certain kind of revenue and ecosystem. So we should allow them to do, certain things. Third is, how do you do innovation? I think this is extremely critical. I think we blamed shadow IT back and forth, right? We still keep doing it. But in an AI world, if you do not allow the business to go and experiment, I think it is going to be tough. The CIO, CTO cannot be in every meeting. It's just not possible.
Agreed.
Right?
Agreed.
So sometimes you have to actively encourage, kind of shadow IT. But when it comes to implementation, you need to ensure it goes through the engineering function. So I think these are 2-3 things which I have followed and have been reasonably successful.
Oh, brilliant, brilliant. I think, Ajay, you wear business and so digital and tech roles, both is what you work on. So what is the business view on digital platforms, including channel strategy, right? Because you are in a very deep segment. The business segment you are in, not too many guys get in, right? So used vehicles and all of that. I saw you do tire lending as well. Lending against tires, it's a fairly significant business. So in this framework, how do you build business? How do you use technology? How do you monetize this whole framework? So maybe a quick view, because we run a very large group.
All right.
And many of you here in Mumbai may not know the strength and size of Shriram. You have to go and see the numbers. You'll be surprised.
All right.
And now you know when your guys got funded as well, right? So it's different.
All right. Just to put in a number over here, we're talking about roughly 3 lakh crore assets being managed. For that kind of a size, one of our biggest strengths, the commercial vehicle business which we run today, which is almost 50% of our portfolio. Now, when I look at those kind of numbers, predominantly how that line of business gets digitized, right? I mean, there are not going to be many people who's going to come onto an app and, apply for a truck loan. Let's put it as simple as it is. So how do you find out alternate ways, where customers can actually be penetrated better? How do you look at opportunities where customers can be cross-sold, upsold, or whatever? So which is where we started working on, derivatives of products, right? Tire finance is one such thing. Fuel finance is another such thing, right? These are things which are everyday consumables for customers, right? One truck roughly runs for around 15 years, right? And you're talking about entry into a market. Now, this market in itself has a lot of entry barriers. We don't have anybody who's trying to solve that problem at scale. It's real dirty work. You need to go out to an aggregator, or I would say a fleet owner or anything of that sort if you really want to build on that space. Now, from that angle, if you look at, we are building all our peripherals in a way that, customers can come and look at servicing themselves. If we are able to build a good service ecosystem around it, I think we are engaging with those customers. We've got enough and more data to understand how these customers can further be given offers for, and how do our branches or our RMs further go and talk to each of these individuals so that we can convert it in a much better way. So that's the commercial side of it. The retail side is as simple as how you have all the other sides thinking. But again, our segments that we offer today are somewhere not in the elite or the affluent. We are at masses. We work in that strata of society where financial inclusion becomes a significant role in whatever we play, and that's why we firmly believe our roots are also as an organization. So that's the strength. We try to play around the strength. I'm not here to compete with any of the other players who are looking at digital mass market space. I'm looking at digitizing a lot of stuff. That's where our clarity is, and we still further look at solving for problems there. There we see a lot of opportunities.
No, brilliant, brilliant. Rohit, you have worn too many hats, right? I don't know how many. I think entrepreneur is also one of them, right?
No.
You've done all, right?
Yeah, so most of the fintech parts of it, yeah.
Yeah, okay. So now given that you are run a fairly significant, HDFC Life is very, very large, right? And you are sort of running transformation programs. So how do you link such a large transformation or such set of transformation, let me not be specific to that transformation, to revenue, profitability? I remember talking a few days back, let's not say remember, few days back, somebody was going through a large transformation. I said, business benefit kya hone wala hai? Usne bola, agle call mein bataunga. So what is the return which is going to come? I'm not about too far back, very significant leader right now. So kya farak padega usse?
Right, so I think from us, when we build large transformation program, the core cost benefit analysis is done beforehand. The KPIs and metrics, how they would move, are defined much before the start of the program itself. And they're divided into specific, so for example, the part that we are running on to has 7-8 parts. Each of the 7-8 parts has defined KPIs, defined, agreed, signed off KPIs by all stakeholders. onto which are directly related to business. It could be percentage of business done digitally. It could be first-time rights. It could be direct or direct customer-facing metrics as well. So there are a lot of metrics which we track from a transformation standpoint, and these are the levers which we drive from a strategy standpoint. So, when we talk about technology, technology is affecting almost all the levers in the organization which affect the P&L from that standpoint. From a profit and a cost standpoint, both, because any cost saving initiative, if there is one, show me without technology. If any profit making initiative is there, show me one which is without technology.
No, I agree. I think, but to some extent, even I've seen, I mean, 10 years back when you talk to a CIO or CTO, they will talk some language on some tech too much. I think all of them talk so much about business. So business के लिए tech सीखना मुश्किल है. अगर tech ने business सीख लिया, तो fintech ही बन जाएगा. I'm sure you will do. You are changing the market at that scale. Maybe Kushal, from your perspective, before we get to your question, I think it will be good for us to quickly understand what you do, because you are a new age entity. You have built a lot of frameworks on co-lending and supply chain and a lot of other newer areas. So quickly, if you could introduce the company a bit, and then we'll come to your question. And last time I met you, your look appeared to be slightly older. After funding, you seem to have sort of lost a weight, or maybe look younger now.
Thanks. For this, we will discuss separately. Anyways, very good evening, everyone. Thank you so much for having me here. Myself, Kushal. I'm founder of Knight Fintech. We are a new age banking infrastructure company, largely focused on digital lending, co-lending, embedded finance, and treasury management. To put it simply, what we do, we are essentially building one of India's largest lending ecosystem, in which right now about 95 odd lenders are there. What we are doing is we are building those digital rails that moves the money, that connects hundreds of lenders on one side, who are the capital providers, which is the supply of the capital, to the distribution of the capital, which is all the different new age fintechs, DSAs, BCs, smaller NBFCs, who are seeking for the capital, as well as the different B2B and B2C apps who have got millions of customers and who want to monetize that customer base by way of adding the lending services to them. So essentially that is what Knight Fintech does. On one hand, there are the lenders who have constantly need to deploy the capital, and on the other hand, there are the different entities who have the access to the customers, who have access to the distribution, who have solved for the collection, and they are seeking the capital. And Knight Fintech builds that entire lending stack, everything from origination to credit underwriting, to how the entire servicing would happen, how the collections, recovery, regulatory reporting, bureau reporting. So it's an entire lending stack for all forms and shapes of lending.
No, perfect. So let's move it because you have a vantage position, you work on other side. So we have obviously institution on this side. How platforms like yours, and you can be generic or specific the way you want, can help the entities reduce cost to serve, ensure the readiness on regulatory is there. In fact, tomorrow I'm doing a session on regulatory compliance frameworks itself, because it's so large, it's an infra level itself, right? So while tech is infra, maybe regulatory itself is infra, right? It is different level. So how can you help, and how do you help in scalability? Once you scale, somebody has to slow down because compliances go for a toss or security does not work. And co-lending has more regulations now than we can think of, right? Given that CLM2 is not there. So maybe a quick view on how you're helping.
Sure. So I think I truly believe, being technocrat myself at Knight Fintech, I look at the business and the tech product both. So technology is definitely a backbone for any financial institution. Basis the technology, the decisions that we are taking today, that is going to have a profound impact on how we are going to source the customers, how are we going to service the customers, how we are going to underwrite the customers, and the overall regulatory compliance and the readiness of a platform for any future regulatory changes that comes in. Throughout the panel, maybe we'll try to pick some of the examples, but I'll try to be quite short. In terms of talking about the size and scale, right now we are seeing the tremendous amount of complexity at which we operate, right? We all understand each lender will have their own processes, they will have their own products, they would have their own underwriting processes, they would have their own loan origination, loan underwriting, processing systems, etc. As the ecosystem enabler, as an infrastructure provider, we are building that core infrastructure layer. So the platform has to have an extremely agile. The platform that needs to handle right from a microfinance product to a supply chain finance product to a home loan and loan against property, or a commercial vehicle loan, or a personal loan, or an education loan. So a platform that needs to be that agile, that can handle so many different kinds of products, so many different kinds of processes. And the process will also differ between each and every institution. So that is the kind of challenge that Knight Fintech has been working for. In terms of the numbers that we are right now doing disbursement of close to 3,000 to 4,000 crores per month. Collectively, the platform is servicing right now about 65,000 crore of volume across the different asset classes. So the technology and the technology-related decisions are very, very important, and we can go into a more detailing in terms of how the technology has a role to play, and all of us are here, as Mesh also mentioned, that in fact, each institution actually becomes a technology company, right? So whether it is a bank, or it's an NBFC, or a fintech, or even the non-fintech guys, like who are a pure B2B e-com, Q-com companies, they also are embedding the lending solutions. So effectively, the finance is something that comes into the play. Every business becomes a technology company, because technology is no more an option. Technology is the necessity, and it is not something which is a luxury. Right?
No,
so it is an absolute essential to stay relevant and to ensure that the platform, the technology, the process is future ready across the three stakeholders. Your three primary stakeholders is the internal stakeholders of an institution, the actual business users, the tech users, the finance compliance people, the customers, and the regulator himself, right? So any change that comes, whether the customer expectations change, or the business user expectations change, or basically the overall regulatory and the compliances, the platform has to keep up the expectations.
Perfect. Ramesh, from your perspective, we have a lot of initiatives. Every bank will, every NBFC will say, हजारों काम करने हैं. Which is the kind of stuff you would do from a tech perspective? Finally, it's a game of productivity, right? कुछ भी बोलो, top line and bottom line can only change through productivity. बाकी तो ज्ञान है, right? So, what will unlock productivity fastest? Journey change, process change. What would you recommend for any NBFC or bank which is looking at dramatic productivity shift? What should they do?
So I think, Samir, it's multi-fold, right? Because a lot of things, it depends on your starting point. That's real, right? Because different time, people start at different thing, it becomes easy. I think first thing is alignment. I think that is where the biggest struggle I see, right? Because, financial services inherently are siloed organizations. Because everyone bother about their own productivity. Credit will be bothering about credit productivity. Ops is ops. So now, how do you break those silos and then talk about an organization productivity? That is number one.
Correct.
That is very tough to do, because the way in which people are measured, bonuses are given, it's very different. So unless you are going to change that kind of construct, it is going to be a tough one, number one, right? Number two is that whatever you're doing, you should meet the deadline. See, that has worked very well in a lot of projects I have seen, right?
चलते ही जाता है.
Because that day you are live, right? So that means that day plus one, some kind of benefit have already started kicking in. But if you drag on the project forever, this is absolutely, you can't do anything, right? So that is focused on getting it delivered on time, right? The third one, how are we going to use the whole automation or agentic or AI, which is real, by the way. I think every day you read something and then you go back and forth in your mind. But I think it is just amazing how certain things can be done. Might be you should do and stick with it for 1 year. There is no need to change every 2 months, right? And I see a lot of organizations struggle because today you do something, in 3 weeks down the line you want to do something else. I think stick to certain things for a year.
That is very, very sad. It happens all the time.
Exactly right. I think if you do just these three, I think you will see increase in productivity. Because other things and all will follow. But really breaking down silos and defining organization productivity, I think if you are able to do that, then I think we will crack it. Which is very tough.
Yeah. So just to simplify it, ops has a different KPI, sales has a different KPI, call center has a different KPI. Nobody's looking at KPI of the company. How do you cut down the flab, right? There is I can tell you that on a lending business, almost same work is done by 5 people, almost same. But nobody's looking what the next door guy is doing, right? So that process continues and we are in the chicken next story, right? Which is good for us. Otherwise, what will we solve? रोटी कैसे मिलेगी अगर हम ये नहीं करेंगे तो अच्छी बात है राइट सो डोंट डू टू मनी चेंज राइट slowly we'll make more money out of it okay that's consultant's life but again Ajay from your perspective given that you are also looking from a revenue perspective where does the tech and digital drive maximum impact right acquisition conversion कहाँ पे पैसा बनता है और कौन से metrics के लिए CDO को responsible होना चाहिए and what as a CDO would want to deploy lever right because ये 3 चीजें change हो जानी चाहिए my personal belief is forget everything focus on TAT so what is something which you think will help in the market movement as well
so I'll take this question from a group perspective right because we run one lending as an institution insurance companies as institutions the recent additions are the capital market space where we've got wealth as an institution broking as an institution and things like that. So when you weigh the entire spectrum of things, right, I mean, you see that there's opportunity across where we want to, one, cut costs, right? So platforms play a critical role. While how do you look at standardizing, but at the same point of time, not lose the nuances of each of those entities and the work they're supposed to do. How do you look at customizing it basis whatever the preferences are? That becomes one of our clear priorities. The second piece is, because that will also give cost rationalization. How would you look at, paper consumption or the moment you horizontalize it for the group? The second piece, what I always see is, one, maximizing revenue at what cost? How do you look at, upselling, cross-selling? Because either तो data को कोई कमी नहीं है, right?
Data बहुत है,
right? I mean, there is enough and more data. What we are trying to find out is how do you enrich this data? How do you look at, milking the data so that we can crack more and more customers to come on? That's one of our key initiatives. The other piece, what I'm also working on is physical channels, because we've got around 4,000 odd branches. Where can I look at mapping revenue per employee, right? So that's the metric. क्योंकि what we are talking
वही है revenue per
एक ही है
बाकी सब
क्योंकि the moment we start working on that we are now reinventing everything what you want एक branch में see back in the day when physical files used to be there right
not back in the day
हाँ
today
ये दोनों में है right I mean so the point is retail products are much advanced commercial में थोड़ा पीछे है right so business verticals demand certain change now the point is there are so many people where you'll see hands on top of files which are moving physical couriers में चला जाता है all those things can be eliminated that's the opportunity which we see as transformation specialists within the group and that if we are eliminating I think we've got significant headroom for us to improve on our rota उतना ही है
नहीं I think finally the ROI है सिर्फ अंत में किसी बैंक और NBFC की P&L ही दिखती है right if you don't focus on P&L it's a debit which is existing Rohit I now consider you as only insurance expert okay I'll not ask a question on your banking experience so where does tech create the maximum impact in insurance we are talking about distribution also is very tough underwriting persistency is something which I have never heard about it you told me okay that's how I learned so questions are also learned from him only right claims experience and some of the claims experience are very poor in the market generally so where does it makes the maximum impact and what is one metrics you would want any insurer to drive in the market on technology basis
so I think it depends on the market maturity and type if it's a growth market maximum bang for the buck would be on the distribution side if it is if it's a market which is optimizing itself and then you're looking at large number of fraud cases, then underwriting would make the maximum bang for the buck. So depending on what the market is what you will have to focus on as an industry and then as a company. If it's a growth market, for example, or if it's a market in which newer products are getting launched, how do you push those products into the market to the customers? That becomes a key area for us to look at from a technology standpoint. And there are multiple ways of enabling and doing this. You make simpler products, you train your people, you hire more people to sell, you find more channels to sell, you go to aggregators. Those are the pieces in which you would do similar things from a distribution standpoint. At the same time, there are products where we see large number of fraud cases happening in. There you would focus on fraud models, you would specifically look at early detection of fraud. So before, at the time your application is getting submitted, we will do a fraud check. What is your propensity to do fraud, right? It happens in the industry. So, and then, there are models in the industry which are available by looking at your face. Will you do fraud or not, right? We don't depend on them, thankfully. Yeah, so depending on the the product, the market type, and in India is not one market, right? India is multiple markets itself, right? So depending on the type of products. In insurance, you have unit-linked products, you have term products. Similarly, different ways of handling different type of products. And the products which go to aggregators, right, or your digital channels, they are very different versus products which go to banks for selling, the bank assurance products. So how do you differentiate and build technology around that? So it's an onion peel in that question, yeah?
No, perfect. And for anybody who has question, maybe you guys can ready. We'll start in some time. Kushal, from your perspective, given that there's a change, CLM2 is no longer there, and CLM1 is going to scale, and of course, other perspective when you bring it. So, how do you sort of help these companies in scaling the business, and how do you make a direct impact? Maybe we'll be shorter. How do you make a direct impact to the P&L of the company?
Sure. So if you look at, you can have the different kind of technology solutions. Now, some technology solutions are there to move the top line. Some technology solutions are there to move the bottom line. And some technology solutions either by way of reducing the cost or by way of reducing the risk, right? So now there are different solutions fitting into the different things, right? Now, when we talk about increasing the top line, obviously all kinds of models which are helping in extending the distribution adds a value. So co-lending definitely fits quite well there. In fact, the CLM model fits into both of the buckets. It expands the top line, it expands the bottom line as well, because it's kind of a business line in which, for example, for the senior lenders, they are cutting down on the cost in terms of the customer acquisition, which is practically zero customer acquisition cost, and very little operational cost in terms of the management and the servicing, because a lot of overheads, operational overheads are with the junior lender, who are supposed to acquire the customer, service the customer, and collect the money. So in those sense, overall, it basically adds value across the different buckets. Some of the other solutions, like in terms of, for example, sales agents, which are doing an outbound sales, those will be the solutions which are going to help in terms of, or the models in terms of the funnel efficiency, tracking, etc. Those are all the models which will help in moving the top line. The other models, for example, which are the early warning signal system. Now that fits into the compliance and regulation bucket, as well as it fits into the risk management bucket, that how the systems can be leveraged, how the technology can be leveraged to reduce the risk, to reduce the potential delinquencies before the delinquencies have arrived. So now those are the things which can potentially help in risk mitigation before the delinquencies has come, and essentially helping into directly reducing the provisions, reducing the NPAs. So those would be the different, and then operational efficiency is something that everybody talks about. So whether it is with AI or without AI, what are the technology solutions which are using, which are going to unlock the efficiency across credit underwriting, across the processing, across the decisioning, across the servicing, how much of processes can be done automated?
Fair. I think the next question is around when you look at group level or a large entity level, how do you deploy technology at large, right? So for example, when you're running group, every group leader will run in their own direction, right? And all of those complexities will arrive, right? So Ramesh, you have run group. What kind of architecture choices will be at the group level so that the frameworks are common, and how much of entity level liberty you will give. So what framework should somebody who is running a group leadership structure should be doing? It will be relevant for individual, but obviously generically as well.
I know. I think group jobs are, in my view, fun, right? Because it's just not a technology challenge, because you interact suddenly with 6-7 CEOs, right? Everyone has got a different view of what their business are, how do they want to do. But I think, again, what we see as in a very acceptable approach is, don't reinvent the wheel, right? If you are able to showcase that you are not reinventing the wheel, there is a reasonable solution exists in one part of the organization, you are bringing it to other part. I've always seen people accept it, right? Because again, it goes back to doing it in a very, very short period of time, right? Because the reinventing wheel is a problem. The second, I think the biggest advantage is, these kind of group structures have is your ability to move around people, because it attracts a certain different kind of talent where they would say, look, today I'm going to do business one, tomorrow I will do business two. And then if you're able to play around that quite well, and some companies have done extremely well, I think we do it quite well in many of the functions as to how do we move around people. So in that case, what happens is, there is someone in the system who kind of keep retaining the knowledge, right? Even if they are outside of the system, that is something which really helps. A third one is, I think, how fast we can innovate. Okay, I think we simply underestimate how much we can learn from other industry and innovate. Okay, and that's why if you see innovation is problematic great example is, the lending. And in fact, I was talking to you right now, if you pick up 10 lending applications, every application looks the same. Right now, I have a problem with that, right? Because there is no one even showing me a different approach to a screen or a layout. Now, that is very problematic, right? Now, can someone who's doing lending business, if they go and see how an asset management business is done, can we do it something different? I think that is very, very crucial, and we have seen when we were able to do that, the product definition itself becomes different. So I think, Samir, in my view, these are the advantages. And I think it will be a grind. We'll have to talk to people, convince people. I think we should not give up hope. But once you're able to show that, I think you show better progress.
Okay. Perfect. Maybe Ajay, same question to you, more from business layer, right? Because problem statement simple है. बहुत सारे इवेंट होते हैं, इवेंट में सब जाते हैं, और मेरे को बहुत तकलीफ होती थी, कोई भी जाके कुछ भी ले आता था, right? अभी घुसा दो उसके अंदर. And अभी thankfully the market is more saner. And partners are also bigger and they understand that nonsense is not there. Otherwise, we'll get somebody in saying, "Mil gaya mujhe." Abhi karo to kahan to ghusaye, right? Kahan ghusaye, fabric hai nahi. So, how do you build group level structures, and what would you be saying? Ye to ho hi nahi sakta, hum lenge hi nahi. What policies you can build around that?
I'll keep it very simple, right? For all of my organizations, what I'm looking at is defining what are my standard stacks which are needed. पहले KYC है, KYC के लिए 4 vendor है.
Correct.
As simple as it is. Agreement है, agreement के लिए 4 vendor है. Deploy some in some parts of the organization, as long as you're breaking it down completely. And then you tell, which is the toughest part in the fintech ecosystem to deliver something inside an organization. The toughest part is getting into the organization.
Correct.
Right? If that work is done, your agreements are signed, then it is very easy for somebody to float within each of the group entities. That larger part of the problem is done. Second is putting into business sponsorship. Connecting people to various leaders once your agreements are signed, give them access, tell them these are the right people whom you need to go and crack, and this is the business case which we need to be looking at, is what I've looked at democratizing. It has always worked for me, irrespective of whether it's a small organization or a large organization. And once that build-up is done, automatically we see use cases defined. And that's a standard stack. Everywhere, see, in our group standpoint, we've got all large organizations, nothing is small. Now, invariably, we need fallback or even a round-robin logic of a 25% share between vendors also, so that, we're always up and running. There's enough and more opportunity for more players to come and play within our group, right? So, creating that ecosystem where somebody can come inside, POC chalao, दिखाओ कि ये चल रहा है, get on board and then move it further. That's our typical way we approach. Because otherwise what happens when there are too many people involved?
I know.
1000 vendor आ जाते हैं अंदर and पता नहीं किसको, everybody will have a favorite. Right? So we look at first identifying at a group level कौन अंदर already है. And then we look at, figuring out what are the missing gaps and find out what do we need. And in our case, we've also got an internal technology company
Yeah,
also.
that also interesting.
Yeah, so that's the other dimension which you've got, who's also looking at, building solutions.
So just a point, Novak, which is outside, is actually Sriram Group, right? So it's interesting that somebody is building inside. The NBFC also is owning that structure, which is phenomenal.
So the logic is, now Novak has hit that stage of maturity where we want to be clear at Novak's standpoint, saying that, we want to be focusing only on what we are good at, nothing beyond. For all the others, just bring people inside, get those partners on board. Let's not look at reinventing the wheel. Somebody is doing it better than us. Let's be specialized on whatever we are doing. That's the space that, and the level of maturity which Novak has hit. And this is the process, democratize. Andar leke आओ, agreement sign करो, उसके बाद find out use cases which can be distributed.
No, okay. Rohit, from your perspective, maybe I'm jumping here and there, given that paucity of time. There's so much of change happening because of DPDPA and other things. From an insurance perspective, what all will change? And how should life insurers sort of plan for regulatory changes? What happens? Because otherwise customer experience is still not so great. How do we ensure that continues? So slightly off the cuff, but I just want a quick comment on that.
No, I think the industry has performed very well with 4 or 5 changes in last 2 years, and very large ones. So yeah, we've had the surrender value changes, we had the free look-in changes, we had the GST changes. All these changes have been in the industry. And now, obviously, DPDP is coming, but that's for entire industry as such, not only for insurance. So there are changes. The industry has shown that it can be flexible to these changes. Surrender value was a very large change. You had to do changes to all the product suite that you had. And a company like ours has active products running in 50s and inactive products in 100s. So you have to do all those changes. Similarly, GST, doing the change itself. Forget the financial implication of that, right? Because it was a negative financial implication for insurance industry. But doing the changes from a technology standpoint was a huge task, and we were given very, very short deadlines for doing that. And technology had to do the mountain climbing in this case, right? Specifically, it was a vertical marathon for us, specific. I think the changes, and we expect the changes to continue. There is IFRS which is coming, which is the next one, which is there, for which we will be building stuff. DPDP, anyway, we have a calendar in front of us. There are other changes. There's risk-based capital coming in. There's risk-based supervision which is coming in. All these changes which are coming in the industry, they're making the industry stronger. So with that change, each of these changes also evolving technology to be more resilient going forward. So we are getting more and more resilient with each change.
And maybe just another off-the-cuff question. You've worked on a NBFC, you have worked on now insurance side, you have a post-side experience. Which tech role is difficult, this side or that side?
I don't want to put box roles, but I think I've seen changes on both sides. KYC norms just changed out of the blue twice on that side. Here we've seen changes. So I think change is something which will come. What is important is how fast you are, how flexible you are to think about systems, and how do you build that change in the system going forward.
Oh, perfect.
I think that question should be asked over dinner. That question should be asked over dinner to him.
Go ahead, I just put
No, that question you should have asked him over dinner. Which one's tougher?
He's not answered that, right? Okay, interesting. Kushal, from your perspective, I'll not deliver, I think we've spoken about co-lending and others. I think, slightly generic question, how should the lenders look at tech going forward from a partnership perspective? What is the next stage of partnership they should look at? Because opportunities are huge. And interestingly, there are dearth of good tech stacks in the country, right? So what should be the long-term phenomena on the banks and lender side to work with people like you? Again, let's make it more broader rather than just what you guys are doing.
Right. No, I think interesting question. And if we see how the industry has evolved, like as the tech has evolved, similarly the pricing models have also been evolved, right? So gone are the days when those capex plus AMC models were running, right? So now most of the times the lenders are putting more onus on the vendor that you have to take care of the implementations, deliveries, timelines, et cetera, right? So what I'm trying to say is that it is the relationship of between the vendors or the platform providers or the technology providers with the lenders is gradually evolving in more and more into a partnership where both parties own up that yes, we want to build something that scales and that scale is those business outcomes are linked to the revenues and the outcomes for the vendor also. So that kinds of aligns well to vendor with the business, right? So there was the first model when it was a capex and AMC models. Still it's existing, but in most of the new kind of the lending players, it has becoming a more and more into an OPEX based pricing where you have a pay as you go kind of a model. As the business outcomes are getting achieved, you are able to get that. And especially in some of the AI related products, even it has gone further that it's not just like a fixed OPEX, but sometimes it is also the outcome linked things, right? So if an AI is supposed to deliver this business metric, whether it is in terms of cost saving, risk reduction, whatever we say, so sometimes the pricing is directly linked to the outcome and the business value delivered. Now that is something that adds the discipline for the vendors that yes, they need to deliver and they need to really create the value, and that is how you are able to create your own business model.
No, perfect. Yeah. Maybe we have time for one or two questions here. Anybody has a question? Oh, marathon karke lock karke jao corner. I think we have always a bias in front. Guys, can you just go to the back side and if there is anybody else, you can raise your hands. This is the last session, so we have all the chance to talk and sort of enjoy as well, right? बाकी लोगों ने आधे घंटे लेट किया तो हम 10 मिनट तो कर ही सकते.
Thank you for a wonderful session. I have a question open to three of you, Mr. Rohit, Mr. Ramesh, and Mr. Ajay. Any one of you who finds it more relevant can go ahead and answer that. So before starting an entrepreneurial journey, I was working with few large organizations, and typically one challenge which I've seen is, although the technology keeps evolving over a period of time, large organizations take some time to adopt the technology because the cost of replacement is too high. When I'm talking about cost, it is not only the commercial aspect of it, but there are too many interlinked systems which are operating in large organizations typically. So as a CTOs of large organizations, typically how does the decision making work in that case? Whether you should replace, adopt to a new technology or still live with an existing technology. I wanted to know more about the decision making factor towards it.
If you see 50% of the time, the decision making is very clear, right? Because whenever there is an obsolescence enforced, typically financial institutions move forward. They don't stick to having systems which can create vulnerabilities, which can create any kind of infosec issue. So that's fairly straightforward. The second challenge where a lot of things are coming up with, you feel there is a better system out there, okay? And then you feel your current system doesn't. That's where a lot of deliberation happens as to whether I need to migrate from a system A to system B, right? And that depends on, at that point in time, what is your state in the market, how good your business done. Actually, if you see, a lot of these migrations happen when you're not doing the business well, right? Because people feel there is a need to move, otherwise you're going to die. So I think it is not very, very complex in my view, but it depends on the timing, it depends on the people. But the other one on obsolescence is very clear. I think all of us have a roadmap through which we just keep on migrating to newer versions.
I think if you have a very good cost benefit, answers are very clear.
Just one more point to add to it. Our technology landscape in India across large organizations have changed, right? Starting from board appointment onwards, right? We've got one mandatory director who's also part of, leading technology and digital. You've got the entire hierarchy which is now driving change. Businesses started demanding technology as a solution to problems, right? For scalability. So the entire perspective has changed. So decisions, more than tech pushing a decision right now, it's become more business-led and business-centric. That's the only way this is going to scale further also, because you see, as and when things are getting more and more evolved, you will see that's going to be the driver for anything.
Yeah, we have time for maybe one more question.
I'll give you an interesting anecdote till the time they think about a question. I got a call today. There's a user who called. He's vibe coded a calculator. He was sick of his Excel sheet. He vibe coded a calculator, put it on the HTML. He wants me to host it. And I said, yes, I will do it after checking it. I will go through the validation, I will do it. So there is no pushback from enterprise teams to, to consumer tech or what consumers want. As long as they see value, we're fine with that. And as long as it is within the guardrails, I'll have to check from an InfoSec standpoint, it's absolutely fine.
Yeah. We have time for one more question maybe. Yeah, I think there's one more question from the other side. You can just check it out.
Okay. I think Mr. Samir, you talked about the P&L. So a short question for you is...
Can you
We can't hear you. Can you keep your mic close?
Yeah.
I thought you talked about something P&L. So a short question for you is in terms of P&L and the process, which should a company focus on, and what is the reason behind?
Did you follow the question? Can you just try it again?
Okay, the question is, Mr. Samir, you talk about the P&L, okay? Means profit and loss, okay? So a short question for you is, which should a company focus on, okay? And what is the reason behind?
You're asking me?
Yes.
Okay. So I think they are interlinked. If I look at the BFSI segment and lending segment, I'm talking about lending. If you can typically increase the productivity, very simple logic, your top line will grow because there is no other choice but top line will grow. And the cost will come down because cost per transaction will go down. So the dynamics can be anywhere, right? Dynamics can be, for example, if you reduce TAT, when you reduce TAT, you will cut down cost because you will replace human intensive work with technology, which is where the customers are looking at. You will also pass the burden of work, some bit of work back to the customer. For example, when customers are onboarding, when you do it manually, you used to make mistake. You used to make mistake even now in Maharashtra, when you try to write your name, my daughter's name is, I'll not name her here, but obviously X Jenny, but they will add X Samir Jenny because that's how they are, right? So I think those biases will go away. Customers will do that part themselves. So we need to pass on the work back to the customer because they are authentic. That's why when they get sources from KYC and all, they are taking care of it. So we don't need to run around. Otherwise, a single name change in a bank can cost $1,000, if not less. Actually, it's more because it will be changed by 8 people. QA, sub QA, 3 QAs will do it, and documents will get carried forward. So I think it's a basic framework. If you focus on that, productivity and revenues will go up. We are at that nascent stage that this should be sufficient. The next level of iteration will happen when each of these models can improve. For example, any entity, and being very candid and very open, I commit in every agreement with my customers on many of the journeys, I document we will reduce your cost by 30% and productivity and revenues by this X%. I write on the contract because that's what is easy. That's direct. The next level of iteration will be difficult when maybe you reach one level of iteration, then you have to do more, right? So I think the brutal honest is this market is still in very, very sort of basic infancy. I say we are ahead of the market, but still there is so much easily doable right now. Okay. I think with this we end. I think this is, we sort of crossed some bit of time, but I'm sure at least I enjoyed this session. I enjoyed because normally when you go to the panels, I was always nervous कि ये बंदे क्या बोलेंगे. And now I know that you guys are experts. Whatever I'll ask, you'll get the right answers for, and very, very comfortable talking to the friends. So thank you guys for coming. Thank you for traveling across and supporting us.
Yes.
Maybe I'm very poor in this.
Thank you so much to all the panelists. It was lovely having you guys over here, and
Thank you. Thank you.
very insightful conversation. And about the audience,
We are very conscious about this branding thing, okay? I always go green. Thank you. Thank you, Ramesh. Thank you for coming. My team loves working with your team. Thank you. You not कभी तो काम चालू करेंगे सामने. Thank you for coming. Thank you. Thank you. Yeah, sorry. I am very poor in these things. Come. थोड़ा पास आ जाते हैं, आगे जाते हैं. Thank you. Thank you. Thank you.